Welcome everybody to our Monday market prep or market analysis. As always, we are going to be going over gold. We're also going to take a look at SPX. Whoa, what happened there? Sorry about that. But all right, let's go ahead and get started with some technical analysis. Look at some of the levels that we have. And then like I was talking about earlier, I want to mention some things that happened last week with Trump's tariff talks and as well as with the NFP that we saw on Friday. So first things first, with the technical analysis that we have going on here, looking at the daily time frame, we can see that overall gold still very much bullish, very, very close to these all-time highs. We tried to pass into these highs. As you can see, price wicked into this area, kind of trying to reach into the all-time highs, but failed to do so. I believe this was, yeah, it was on Thursday. Then Friday came along, and then we had again a little bit of a minor sell-off, as we can see here on the daily time frame. What's interesting to me is that price basically came and retested these lows over here, which is an area that I do want to mark off. So I'm going to go ahead and mark this off here just as an area of interest. Remember, we always put areas of interest on our daily time frames, and then we go and adjust them and make them a lot more precise on the 4 hour and on the 1 hour, because again, we're day traders, right? So we have our resistance, we have our support here on the daily time frame. And again, overall, if we just follow this market structure, it very much is just bullish, especially from these lows here at this 31.76. You can see just continuous highs, lows, highs. And again, we haven't broken those lows. So unless we're breaking those lows from an intraday perspective on gold, we're still very much bullish, right? We could still very much just continue to push into these all-time highs. Now, let's go on to the 4 hour so we can get a closer look at these zones here. Again, yeah, this zone right here, pretty valid in my opinion, just because of the fact that you do have so many reactions towards the left. You had a minor fake out, it looks like here on Wednesday, May 28th, where price broke these lows and then just snapped back into this area on the 4 hour. Look at the past as well here on the 4 hour. We've talked about this zone in the past, but again, it's always good to mention them. So price pretty much just tapped into that area. We did make this sort of resistance here over the past, this was in the previous session, and it does line up with this area right here. So that's interesting there. And then we have, last but not least here, the 1 hour time frame. We do have an area of sensitivity around 33.14. So I'm going to mark this off. And then above this resistance, I'm going to go ahead and actually move this slightly higher, make it a little bit more precise. I'm going to mark it off just like this so it lines up with these highs over here as well as these highs over here, because as you can see above this area of 33.90 price, although it did break above, you can quickly see how it snapped right back into that area. Same thing happened basically right here. Price got above that area, quickly snapped back and sold off from that area, right? So that's the reason why I'm marking off these highs. It seems just more valid than these highs over here, where price basically just faked out multiple times. But above this 33, actually, guys, 1 second. My dog is crying here. Yeah. Sorry about that. Didn't want to hear her crying in the recording there. But what I was saying is that above this 33.40 area, I want to mark off this zone, which is an area of interest just around here, which is the 33.65s, which again seems like a valid area to mark off. As always, let's look at the past. You can see it very clearly right here. Just the reactions that we have at this 33.66 area, reactions right here in the past, reactions, reactions, reactions. So again, multiple reactions at that area, which validates that zone for us. Now, this is the topic, or what I wanted to mention to you guys, which, as you guys can see here, on Friday, which was NFP, we did see more of an optimistic report. And why do I say this? And why does this matter also, right? NFP, unemployment rate, earnings. These are the main reports that you guys should be looking at whenever you have NFP Fridays. The reason I say it's optimistic is because, as you can see here, the consensus and the forecast, which is these numbers right here, we're at 130,000. We went above that number, so that's an optimistic report. Unemployment rate, as you can see, very much just stayed neutral, 4.2%. No new information there. But what's interesting is, again, the NFP numbers, and as you can see, these hourly earnings, 0.4%, 3.9%, both above the consensus and the forecast. So you basically have a 3-to-1, and I wouldn't even say a 3-to-1 because this is three optimistic reports against one neutral report. So when you're trading a pair like gold, especially gold, I would say, right? You do have to take these economic events into consideration, and this is why. Look at Friday right here, specifically around that exact time that NFP was released. If you had, this is why I'm so keen on fundamental analysis, right? If you have that fundamental edge and you're taking a look at gold at that time where NFP was released and you saw that it was optimistic, what's the best thing you should have done at that moment? Well, from a technical perspective, if we can get some sort of breaks below this support area, then ideally, or from a technical perspective, that would make sense for price to have some sort of a sell-off. And because you have that fundamental backing you up, or those fundamentals backing you up, then made even more sense to be on the lookout for sells rather than marrying the bullish bias on gold and only looking out for buys. So again, with that optimistic report, we saw sellers coming into gold, and you had that strong break below that area of support, which, if you guys remembered, we talked about this area of support. We talked about 33.40, and we talked about that if we do get below that area and close below that area, we have the potential to correct this move here and retest these highs and even fill this previous gap here, which is very interesting. I actually made a video about this on my Instagram page, right? So again, we basically went and filled that entire gap. But once we got to that zone of interest, which is these lows at the 32.90s, that's where price basically tapped and bounced off that area, right? So now we're up to date. We have pretty much our analysis, our technical analysis. We have NFP explained, right? So all of this, in my opinion, makes perfect sense. And it's interesting enough that price went and retested that 33.40 area, and we've now rejected it. So this is what I would plan on doing based off the current price action that we're seeing. Because price already had a sell-off and bounced off of this support right here, you can see that we're starting to create this sort of bullish structure here against this what is it called? Like against these sellers that we have here. Excuse me. So you have strong sellers here, but now price bouncing off of this support and starting to create highs, lows, highs, and now we're potentially making this low. In my opinion, here's what we could see. If price is just going to continue bullish, then from a technical perspective, we already have the bounce off of the support. We already have bullish structure being created. Now what we want to see is price failing to break these lows, so a potential retest of this area. But most importantly, once we get back above these 33.40s, that's when we can be on the lookout for more safer buys, right? Because we'd be breaking above this resistance, we'd be creating a new high on this structure that we're creating here, and we're back above the 33.40, which is an area of interest. That would be one scenario, again, just by following the current price action. But if price is to reject this area, as it's doing right now, and fail to get above that zone, then what we have to do is be on the lookout for further sells below 33.40s down into these 33.10s. But also, if we can get below the 33.10s, then we'd most likely just be continuing bearish below this zone. So I'm going to put this here in red. I'm going to put this here in green so that way we don't get confused. And again, that would be the scenarios that I would be on the lookout for. Personally, because I don't trade Asia or London, there's still going to be plenty of time until tomorrow where I personally trade, which is during New York. So literally, this is all I'm going to be waiting for. I'm going to wait to see if price is above the 33.40s. If it is, I know I'm going to adapt to further buys and just continue to ride that bullish bias. If we ended up rejecting this 33.40 area and got below this support, I'm just going to be on the lookout for further sells, and I'll be looking to extend that bias there. But again, it all depends on the price action that we see within the next couple of hours here. So that would be for our gold analysis here. If we go and take a look at SPX, it's going to be basically an inverse here, right? So let's go look at SPX. We can already see that price is very much bullish on SPX at the moment. I'm going to mark off this resistance. I'm going to mark off this support here on the daily, and then do the same thing we did on gold. We're going to go on to the 4-hour, and we're going to look at these zones here that we have marked off. So we got resistance. That seems valid. We also have some sort of support around these areas. And then we have on the 1-hour, looks like, yeah, around this area right here, some sort of support, a little bit of a range being created. Let me just make this a lot more precise here. So yeah, a little bit of a range being created between 59.82 and the 60.20s here, right? But SPX, gonna keep that bullish bias on SPX, especially because of the fact that we are seeing some optimism with Trump and China. All of those agreements, or excuse me, all of the deals that they're trying to make right now, they seem to be going well. So again, so far so good. That's optimistic for the stock market. So I would just maintain that bullish bias on the stock market, but that doesn't mean marry the buys, and you should always be prepared for all scenarios. So let's go ahead and do let's map out some ideas here. In my opinion, if we can just break the highs, it's pretty much given. We just want to continue to follow this current structure that we're on, which, as you can see, very much highs, lows, some highs here, lows, right? Very much bullish, right? It's pretty much given. You can see that very clear. But because we are getting reactions off of this area right now, same thing as gold, let's be on the lookout for any sort of recoveries, some sort of pauses in price action, some pullbacks to then continue bullish, something like this. Or we can look for some sort of further pullbacks below this 59.80s down into the 59.50s and even lower into these 59.20s right here. So that would be something like that. Or most likely, with how the stock market just has been rallying, if price does get to these 59.20s, there is a strong chance that overall, if we continue to see optimism within the markets with the tariffs, most likely stock market is just going to continue pushing into these highs here, right? Because again, let me just show you guys very fast here. Look at the stock market. We're pretty much back into all-time highs. We're close. We're not at all-time highs, but we're basically like right there, right? A few weeks ago, we were down in this area. The media was going crazy. Recession is on the way. Trump is a bad president, blah, blah, blah. Now we've recovered. We're completely bullish on the stock market once again. So it looks like that optimism is very much back here. Let's see, gold, SPX. Yeah, that's pretty much it, guys. Let me put this analysis back here so that way we have the trade ideas set up. And then we'll see what can happen tomorrow during NYSE Open. Now, just a quick reminder for all you guys, we do have CPI on, I believe it's Wednesday. Let me see, just to show you guys before I end the video here. Don't want to make this too long. But yeah, CPI, yeah. So CPI, which is inflation, we have it on June 11th. So that is Wednesday. And then we have PPI the day after. So those are going to be the main reports to be on the lookout for this week. All right, guys. So unless anybody has any questions, we are going to call it a session here. Let's see if anybody in the chat. Zoom looks good. And Discord looks good. So I'm going to go ahead and actually stop the recording here.